Hey everyone, it's your average investor here. Today we're diving into alcohol stocks, analyzing dividends, profit margins, and global reach. Ever wondered how much money alcohol companies make? We're comparing the biggest booze brands on the stock market. Let's see who's pouring the most money into investors' pockets. First up, let's talk about Diageo, the powerhouse behind some of the world's most iconic drinks, including Johnnie Walker, Smirnoff, and Guinness. These brands are household names, enjoyed by millions across continents, and they're just a small part of Diageo's massive portfolio. The company's reach is truly global, with products available in over 180 countries, making it a dominant force in the beverage industry. With a vast and diverse portfolio, Diageo has strategically expanded its presence in both emerging and developed markets. This global expansion not only drives steady revenue, but also helps the company weather economic ups and downs in different regions. Investors are drawn to Diageo for its reliable performance and a solid dividend yield of 2.3%, which is a testament to its financial stability and commitment to rewarding shareholders. The company's impressive profit margin of 21% highlights its strong management and operational efficiency. Diageo's ability to maintain high margins, even in a competitive industry, speaks volumes about its business acumen and disciplined approach to growth. This efficiency allows the company to reinvest in innovation and marketing, further strengthening its brands. For investors seeking a stable global investment with a proven track record of rewarding shareholders, Diageo stands out as a top contender. Its combination of iconic brands, international reach, and consistent financial performance makes it a compelling choice for those looking to build long-term wealth and enjoy steady returns. Next, AB InBev, the powerhouse behind Budweiser, Corona, and Stella Artois. They've faced debt challenges, but are making a comeback by paying it down and slowly increasing their 1.7% dividend yield. With a 13% profit margin, they're proving profitability at scale. If AB InBev keeps reducing debt, patient investors could see solid returns. Constellation Brands owns premium names like Corona Modelo and Robert Mondavi. Their focus on high-end brands delivers a leading 24% profit margin. The dividend yield is lower at 1.5%, as they reinvest for growth. If you want exposure to premiumization and strong profitability, Constellation is worth a look. Pernod Ricard, the French giant behind Absolut Jameson and Beefeater, dominates Europe. With a 2% dividend yield and 19% profit margin, they balance income and growth. Their commitment to premiumization and innovation sets them apart. For a taste of European luxury and proven performance, Pernod Ricard stands out. Brown-Forman, makers of Jack Daniel's and Woodford Reserve, thrive on brand loyalty. Their 1.3% dividend yield isn't flashy, but an 18% profit margin shows consistent performance. Focused on premiumization and innovation, they keep their brands fresh. For a classic American investment with steady growth, Brown-Forman is a solid pick. Molson Coors, the company behind iconic brands like Coors Light, is a major player in the beverage industry. With a long history of brewing and a reputation for consistency, Molson Coors has become a household name for beer lovers across North America and beyond. Their flagship products, including Coors Light and Miller Lite, are staples in bars, restaurants, and homes, making the company a familiar choice for many consumers. When it comes to dividends, Molson Coors stands out. The company currently leads the pack with a dividend yield of 2.8%, which is notably higher than many of its competitors in the beverage sector. This attractive yield can be especially appealing to income-focused investors who are looking for steady cash flow from their investments. However, there's a trade-off. Molson Coors operates with a profit margin of just 9%, which is significantly lower than what you'll find at other leading beverage companies. This slim margin suggests that while the company is able to pay out generous dividends, it may be doing so at the expense of reinvesting in its own growth or innovation. The company's strategy is clear: prioritize rewarding shareholders with dividends rather than aggressively pursuing expansion or new product development. For some investors, this focus on immediate returns is ideal, but for others who are seeking long-term capital appreciation, it might not be the best fit. If your investment goals center around high yield and you're comfortable with slower growth, Molson Coors could be a solid addition to your portfolio. This approach often appeals to retirees or those who rely on investment income to support their lifestyle, as the steady dividends can provide a sense of financial security. On the other hand, if you're a younger investor or someone with a longer time horizon who's aiming for significant long-term appreciation, you might want to consider companies that reinvest more heavily in growth. Ultimately, the right choice depends on your personal financial goals and risk tolerance. Heineken NV isn't just about the iconic green bottle or the familiar name you see in bars around the world. This Dutch brewing giant has built a global empire that stretches far beyond its flagship beer. In fact, Heineken owns a diverse portfolio of brands, including Tiger, Amstel, and Sol, each with its own unique identity and loyal following. This broad range allows Heineken to appeal to different tastes and cultures, making it a true powerhouse in the beverage industry. Their aggressive expansion into fast-growing regions like Asia and Africa is a strategic move that's fueling impressive growth. By tapping into emerging markets, Heineken is not only increasing its global footprint, but also diversifying its revenue streams, reducing reliance on mature markets in Europe and North America. Financially, Heineken stands out with a 1.9% dividend yield and an 11% profit margin, figures that reflect both stability and profitability. These numbers are especially attractive for investors seeking a blend of income and growth potential. The company carefully balances rewarding shareholders through dividends while also reinvesting in innovation, marketing, and infrastructure to ensure long-term success. This dual approach helps maintain a competitive edge in a crowded global market. For investors looking to gain exposure to emerging markets while also enjoying the stability of a well-established multinational, Heineken offers a compelling opportunity. Its presence in dynamic economies positions it for continued growth. With its global reach, strong financials, and strategic vision, Heineken deserves a prominent spot on your investment watch list. Kirin Holdings, a Japanese giant, focuses on Asia's booming beverage market. Their 2.5% dividend yield and 10% profit margin reflect steady growth and heavy R&D investment. Kirin's innovation keeps them ahead in evolving markets. If you're bullish on Asia, Kirin is a strategic pick. Asahi Group, best known for Asahi Superdry, dominates Japan's beverage scene. With a 2% dividend yield and 12% profit margin, they balance stability and reinvestment. Their focus remains on their home market, ensuring consistent sales. For reliable exposure to Japan, Asahi is a strong choice. Carlsberg, the Danish giant, boasts a global presence with brands like Tuborg and Kronenbourg. Their 2.1% dividend yield and 14% profit margin show a healthy balance of growth and shareholder rewards. Carlsberg's adaptability across markets makes them resilient. For a globally diversified brewer, Carlsberg is a compelling option. That's our rundown of top alcohol stocks for 2025 and beyond. Each company offers a unique mix of risk and reward, so do your research before investing. Which alcohol stock interests you most? Drop a comment, hit like, and subscribe for more insights. Know your sectors, grow your portfolio. Cheers to smart investing.